Big Five is the name given to the 5 largest banks that dominate banking industry in Canada. They consist of Royal Bank of Canada, TD Bank, Scotiabank, BMO, CIBC. Big Five are all excellent investments for dividend investors because they all have a long history of annual dividend payouts and dividend increases. First, as a disclaimer, I just want to say I'm not a financial advisor, so please do your own due diligence before investing. Let's do a quick comparison between these 5 banks. When looking at the stock price, we can see that CIBC has the highest stock price and Scotiabank has the lowest, but just looking at the stock price does not tell us anything about the company. When looking at the market cap, we can see that RBC and TD are the 2 largest and CIBC being the smallest. When looking at the earnings per share, we can see that CIBC does earn the most per share, but also has its highest stock price. When we compare the earnings per share to their stock price, that gives us a better comparison between the banks, and a lower number is better, and we can see that CIBC and Scotiabank has a lower price to earning ratio. Again, when looking at the dividend payout, a better comparison between them would be the dividend yield, and we can see again that CIBC and Scotia pays a much higher yield. Since both these metrics are based on stock price, it makes sense, since as the stock price goes down, PE ratio comes down and yield goes up. When looking at the dividend payout ratio, they are all paying around 50%, which tells us that whatever they earn, they pay about half of that back to shareholders and reinvest the other half into the company to further grow the company. A 50% payout ratio is still considered healthy and nothing I would be concerned about. The price to book ratio compares the company's market value to its book value, so a higher number would mean that the company is priced much higher than the book value of the company. And among the 5 banks, we can see that Scotiabank is the best value when looking at the price to book ratio, and RBC would be the most expensive. The price to sale ratio compares the company's market value to its revenue, so a lower number would mean they make much more revenue based on their market value, and we can see that BMO is the best priced bank when looking at the price to sale ratio, and TD Bank would be the most expensive. But when looking at just these metrics, there's gotta be a reason why RBC and TD have a much higher premium to them, and we will be able to see some of the reasons why as we take a look at the growth of these companies over the years. When looking at the yearly revenue, we can clearly see 2 winners, RBC and TD. They have been able to grow the most among the 5 banks, and their stock price reflects that, and we can see that Scotiabank is trailing behind them. But when we take a look at the yearly growth, which you can tell by the steepness of the slope, we can see that Scotiabank grew the least among the 5 banks in the last few years. When comparing the stock price, we can clearly see that RBC and TD coming ahead and Scotiabank pulling back in the recent few years. This is reflective of the slower growth Scotiabank has seen in the recent few years. When we took a look at the annualized return, we can clearly see TD being the winner over the years, with RBC being in a close second, and Scotiabank being hit the hardest with the worst performance over the past several years. We will be able to see this more clearly in the graph. TD Bank and RBC has seen the best performance consistently over the past 20 years, and Scotiabank in the past 10 years has really underperformed. When looking at the yearly EPS, we can see in the past that CIBC has some really big fluctuations in the EPS, but in the recent years has been more consistent, but all the other banks have been able to pretty consistently grow their EPS over the years. A better chart to be looking at is their yearly profits, as this is not reflective of the stock price, and we can see clearly that TD Bank and RBC again and again being the winner with the highest growth and profits, but Scotiabank is not too far off. Even though they have not been able to grow their revenue as fast as RBC and TD, their yearly profit is not too far away. When we take a look at their yearly dividends, all 5 banks have been consistently paying and increasing the dividends over the decades, which is a very good sign for dividend investors as it shows consistency and stability, and we can most likely predict that they will be able to continue paying and increasing dividends in the future. When we take a look at their dividend yield based on their current stock price, we can see that TD and RBC usually having a lower yield, but that's probably because they have a higher premium to their stock price. When we take a look at the dividend growth, we can clearly see TD being on top again, and they've been able to grow their dividends the most and very consistently, might I add, and with RBC and Scotiabank being in the 2nd and 3rd place respectively. Again, we can see this more clearly in the graphical representation, with TD clearly being on top, followed by RBC and Scotiabank. And we can actually see them all following a similar pattern as the dividend growth dips and moves back up. But we have to remember, compounding interest over the long term is massive. Even though it's only a few percentage difference, over the long term it will turn out to be a massive return. When looking at these 5 banks, if someone asked me the question, which of these 5 banks would you buy today? My answer would be it's good to own more than one bank to diversify your portfolio. Scotiabank looks very interesting after recent pullback, and TD has been able to grow massively over the recent few years, and it looks like it may overtake RBC soon. And on top of that, they've been able to grow their dividends the most, and if they're able to continue the trend, their dividend payout is going to be massive in the future. But don't take RBC lightly, they've been able to perform very well as well, and I would definitely like to own all 3 of these banks in my portfolio. And as always, if you enjoyed the video, please like and share the video. It really helps out the channel. And if you haven't subscribed yet, please make sure to smash the subscribe button. And thank you for watching. I'll see you guys in the next video.